Hello, everyone, and welcome to episode 2 of the Dantes Outlook podcast. Over the next series of episodes, we'll interview experts in global markets and investing. Our goal is to help both individuals and institutions realize market opportunities and the factors that drive them. On this month's episode, we'll discuss trading tactics and market positioning into the year end. We're at a point when investor optimism is rising, coming off March lows in risk assets and surviving a volatile period in October. And with the US election risk somewhat removed, investors appear to be positioned for a seasonal uplift in equities. In the commodity space, we've seen bullish sentiment return in agriculture, along with deep oversold conditions in energy. And in bonds, we're noticing a pickup in global yields, which could trigger a shift from growth stocks to value stocks. And there's a lot to unpack after such a busy year. So we're inviting my friend, Cedric Thompson, to the show, a fellow chartered market technician, or CMT. Cedric hails from the Caribbean islands, where he pursued a Bachelor of Science degree in actuarial science. He then completing a CMT designation while working in the Republic of Trinidad and Tobago. Afterwards, Cedric spent some time in England, where he completed an MBA at the Cass Business School. Back in Trinidad and Tobago, Cedric is currently a level 3 candidate for the Chartered Financial Analyst, or CFA program. He spent his investment management years working at one of the largest mutual fund companies in the English-speaking Caribbean, with about $3 billion equivalent in assets under management. And there, Cedric performed various duties of investment management, including market analysis and portfolio management. He also launched the first tradable passively managed fund in the English-speaking Caribbean. Cedric is now the investment management strategist at a mutual fund company, and he is also involved in a startup, Fill the Gap, which provides financial and investment advice and education to the people of the Caribbean. Cedric, welcome.
Hi, Dominic. Thank you for the invitation. I'm so happy to be here.
Definitely, it's great to have you. So just jumping right into it, what first drew you to investments and eventually incorporating technical analysis into your process?
I mean, from at an early age, I always wanted to solve problems. Like I would remember in high school doing these problem sets and trying to figure out how to answer these questions. There's a it's the English system is different from the American system, but there's right before um, uh, you had become a senior, you have to do these exams. One of the subjects I was pursuing is called additional mathematics from finance, right? So I was using my mathematical skills um, to solve financial problems, like calculating accumulated cash flows, internal rate of returns, and these sorts of things. Touched on options and these sorts of things. So when I graduated um, from university, I returned home, and again this was in this was in November 2007,
Oh,
right? So this was right before the global financial crisis, and I was able to get in on a professional trainee program at the largest mutual fund company in the English-speaking Caribbean. And there I was using my problem solving skills from a mathematics perspective to add value to the people of Trinidad and Tobago uh, by generating wealth for them through these mutual funds, right? With regards to technical analysis, right? So again, it goes back to my mathematics background. Um, I'm a visual person,
yeah.
right? So it always helped me drawing a graph or writing it down and looking at it in order to internalize it and make the best investment decision. So again, technical analysis just falls right into your lap when it comes to data visualization, right? And also what drew me to technical analysis was the ability that this field used to help you identify turning points in the markets and help you make decisions of when to enter and when to exit, right? So it really added to the overall investment decision skills and tools that I have to make better in to make better investment decisions for the people of Trinidad and Tobago.
Great.
All right.
Yeah, and then going back.
And I just wanted to mention there's only two of us in the English speaking Caribbean.
Wow.
And the first person, Karen Blandon,
Uh-huh.
he was the person that introduced me to technical analysis. We were working at that time. We were working on the same floor and in the same team, and I think it was in a meeting or I had passed by his cubicle or something, and I asked him what he was doing, and he showed me. He said, "Listen, this is a different way to identify expected returns for a stock."
Yeah.
Right? And from there, he introduced me to the CMT program, and a little while after I started the CMT program, I became the second chartered market technician in the English speaking Caribbean.
Amazing, amazing. I think I can definitely see the problem-solving skills being applied, and there's so much that's embedded in the price, right? When you learn the CMT curriculum, you're able to apply it, you tend to realize that all that research becomes a mathematical equation when it comes down to trading, right?
Right.
It's really amazing. So how do you determine these active trading setups? What's your typical time horizon?
Okay, so again, it's a mutual fund company. So the assets we focused on equity and fixed income, and from the onset, when you're at a firm like this, the approach you take is usually, it's not a hedge fund, right? So the approach you take is a top-down approach.
Yeah.
Right. So we would start with the broad capital market expectations and then drill down geographically and by sector, and then into the security selection. So that's where I learned how to invest, right? And then I took the technical analysis aspect of it and integrated it into that process. So the best approach with technical analysis using a top-down process is sector rotation, right? So I was able to develop a U.S. sector rotation model, fixed income rotation model, and a country rotation model, right? So I would develop these models to identify the leaders, the laggards, the sectors or the securities that are improving and those that are weakening, right? And from there, we would know what securities to stay away from, underweight, equal weight, or overweight. And it would usually be the amount would be a bit subjective.
Got it.
Right? Because we would compare it relative to our benchmarks, our respective benchmarks, right?
So is that based purely on like a relative strength and momentum of these different?
So it's so the story behind how I was able to do it, right, is level 3 CMT. There's this book that before they changed the curriculum, you had to read these books or chapters in these books. So you'd have gotten like 7 or 10 books to read and chapters in between to study for the exam, for the CMT exam. So one of the books was Trading with Intermarket Analysis by John J. Murphy.
Okay.
right? And in that book, I learned about sector rotation,
Okay.
right? So from those readings, from those studies, I was able to apply um, a generic
Mm.
um, a sector rotation model for the firm and for myself, right?
Yeah.
Um, from there, um, from there, I left the firm
Mm.
and went to do an MBA, right? So so at the end of the end of the end at the end of the program, I had to do a dissertation, and the dissertation was on creating a U.S. sector rotation fund,
Nice.
right? So one of the so in order to one of the ways I one of the data points that I used to complete this dissertation was interviewing Julius de Kempenaar,
Yeah, yeah. The R
right?
guy.
Yeah.
Yes.
So so he's the RRG guy, right? And I had met Julius a couple of years back at a CMT symposium,
Mm-hmm.
right? I had met him at the CMT symposium, and we managed to stay in touch on LinkedIn. So I reached out to him and I interviewed him for my dissertation, and I
Wow.
was able to incorporate those findings in my dissertation into um, what is now the my sector rotation process,
Mhm.
right? Or asset rotation process.
Yeah, that's amazing. That's really good. That's I think that's how you capture alpha, right? You look for those turning points, you look for the relative
Yeah, you
opportunities, and I think that's where technical analysis has that timely aspect to it that fundamentals don't necessarily have.
uh,
When I was at Fidelity, fundamentals was a top down, right? But then the execution
right.
was where you get the technicals, right? Would you agree?
Yeah. Okay. Yeah. It helps. It really helps with the timing,
Hmm.
even even with the even with the sector rotation. It helps with the timing. You know when to overweight. You know when to underweight,
Yep.
right? And you see it. So I was able to do at at the end of my MBA. I was able to do the research required to see how the how the performance of the rotations would have been
Uh,
over different types of time frames. So it really proved
hmm.
that technical analysis worked. And to be honest, quite this year,
Yeah,
the rotations worked. You know, it really helped
that's good.
generate value for the people of Trinidad and Tobago in those funds. You know.
Yeah, that's amazing. That's amazing. Yeah, I was going to ask you, how do you convince your colleagues about the validity of such a system? And, like you said, it's through back testing, right? And sort of looking at previous scenarios where it actually did work and where you can tweak the model, I would guess, right?
I mean, yeah, it has gotten easier
Mm-hmm.
with technology, right? So I am able to convince my team members using again research
Yep.
that persons would have done to show the profitability aspect of it,
Mm.
profitability and probability aspect of it, and again through back testing,
Mm.
right? So the numbers don't lie,
Nope.
right? So if you can show over time that these models, these technical analysis models add value to your portfolio, the one isn't going to turn you away, right?
Mm.
And another thing is people are accustomed or understand cycles,
Yeah.
and seasonality. So they understand that different securities perform better at different points in time. So
Mm.
once you take it from that perspective, instead of talking about RSI
Hmm.
and moving averages and oscillators, but you bring the conversation to an element that they're comfortable with. That's how you're able to convince your colleagues,
Yeah.
right? So take a little bit of economics 101,
Hmm.
law of supply and demand, business cycles, and these sort of things, these sort of economic concepts, and incorporate it into your discussion when you're talking to the fundamentalists, right?
Yeah. Great, great. And what other like past successes or failures have you seen with, working through systems, understanding cycles, rotations? What have you learned along the way?
I mean, don't give up.
Yeah.
Don't give up. So I can tell you, um, last year. So one of the I was so in addition to the sector rotation models, in addition to the rotation models, there's we I also incorporate an overlay, a technical analysis overlay,
Hmm.
um, into into the process. All right. So it was fairly new to the team, and we were using a combination of technical indicators, oscillators, and trend following indicators over multiple time frames to help make an investment decision. And the yield curve inverted.
Hmm.
That was September, um,
Yeah. 2019, right?
September, October.
Yeah.
Sorry, between October, it's either August or September 2019. The date uh, escaped me, and the market was overbought. It was just going up, 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 and the yield curve inverted. So, when the oscillator is overbought and it gives that sell signal, it tells you to come out. So we came out, and then the market just continued again,
Ah,
and it's like, oh man, we we kind of bounced our heads there. So
ah,
we lost a bit of value there um by just adhering to the quick and dirty signal,
hmm.
right? So you learn your lesson. So I had to go back to the drawing board and say and do some tweaking
Yeah.
to make sure that stuff like that doesn't happen again. And the
Hmm.
second time around was 2020,
Yeah.
where we got the where we got the signals again. We got the signals in February 21st. We got the signal in February 21st. The
Hmm.
Monday where it gapped, the S&P gapped lower was when we got the started to get the signals, and then we were able to. I was talking to the team, the senior management team, and that helped us in our decisions
Yeah.
to exit the market, and then in like 2nd of April or 31st week of April, we started getting the buy signals again,
Hmm.
which allowed us to re-enter the market. So
Hmm.
that was a huge that was a huge success. That
Yeah.
was a huge success because everybody was, and then it goes back to the argument between the fundamentals versus the technicals, right? In April 2020, what fundamental data was available to persons to enter the market?
No,
There
things
was
are getting worse.
it was the peak.
Yep.
and the height of it. And I was there trying to convince the guys, we need to get back in, guys. This
Yes.
is gonna be a V. It's gonna be a. I remember the conversations because we were having daily calls,
Hmm.
right? So it's emergency time. Everybody's working remotely. And
Yeah.
I'm shouting on the phone, guys, you need to get back in. It's gonna be a V. We need to overweight as much as possible into the markets because the models that we were using
Uh-huh.
signaling to re-enter,
Hmm.
right? So I can say for sure that I convinced a lot of people about technical analysis
Good.
this year.
Nice.
I can say that with with absolute certainty.
Great.
You know?
Yeah, that's the thing. I've been working on that too. Like signal frequencies could be a problem, but when it
Yeah,
pays off, it pays off, and I think that's the beauty in it. Around March, I started seeing the divergences creep up, right? Momentum was slowly starting to come back. The speed of the decline was slowing
yeah,
down. And
yeah,
I was thinking, and then we got a lot of extremes, on different ratios, different risk assets. We're just at extremes. And crises happen with short period of time, you know, as
yeah,
opposed to growth markets that happen for an extended period of time. So that's kind of what was going through my mindset during that time period. But that's great advice. Sticking to your system, knowing when it
yeah.
plays out. It's tough.
Yes, yeah. What also helped me was I was comparing the bear market in March to the other bear markets,
Okay.
right? That helped as well. But
Hmm.
again, history doesn't repeat, but it rhymes, right? So I was comparing to see, okay, is this 87? Is this 2000? Is this 2008? Is it is 29? Is it 1929? So I
Yeah.
was there looking at the S&P 500 and comparing it to the other bear markets. My conclusion was that it would have been a sharper 87
Okay.
again because of technology.
Hmm.
I when I look at the market these days, you can tell that it doesn't look as though it looks automated.
Hmm.
It looks automated in
What do
my
you mean by that?
in terms of everybody's running algorithms to execute their decisions. If if it hits this price, buy. If it hits that price, exit. That's what I think.
And I think, you're right. I think it triggers a lot of those rapid sell orders, rapid buy orders, right? And these types of flash
Yeah,
environments. Yeah, I remember
yeah,
was it 2015? Remember that we had the flash crash?
yeah. The flash
That was
crash.
the
Yeah,
kind of like wake up call to say like machines are really in control, and
yeah, yeah.
you
It's
just gotta
crazy.
deal with it. Yeah. All right, and then so that's good. We got a handle on your process and what you're thinking. And now I wanted to get in more of your outlook. Like, what are you seeing opportunistic at the moment? I know you had some slides in equities, Bitcoin tips. Want to roll through that?
Okay, so let me just share with you a generic version
Okay.
of um of what interests me into going into 2021.
Mm-hmm.
Okay, so for fixed income, so again, it's you have a universe of securities. You run it through the uh, the RRG, and it helps you make what helps you determine what securities to overweight or underweight or equal. So one security from the fixed income universe that that looked as though there was some value there, even though it when you look at the markets over the past months, the yields spiked,
Mm-hmm.
right? From my analysis, I think it's 10-year going into 2021 could be range bound between 1.25 to 1%.
Okay.
Right? So it needs to, and I think USC needs to settle before we could really get that upswing
Mm-hmm.
in US equities, right? So we're in that kind of point where yields are settling. It's I think the 10 years finding some difficulty to break above 1%. And
Yeah.
once it breaks, I expect it to be within that 1% and 1.25% going into 2021.
Got it. Okay.
So tips looked from this generic vision. Tips looks like a good opportunity to invest,
Mm.
right? Relative to U.S. Investment grade debt,
Mm-hmm.
right? Based on where it is positioned on the leading quadrant of the RRG, right? And one of the tools that I would use based on uh, backtesting over multiple time frames would be the variable moving average on a daily
Mm.
time frame, right?
Okay.
So so you see tips rolling over a bit. I
Yeah.
think it could find some support around the 120 price level.
Okay.
And once it holds that level of support, uh, you could see it probably trading between 120 to 125, um, heading into the uh, first quarter of 2021,
Mm.
right? So that tips interest me a bit. Now, in terms of international equities, there again, the selective universe of country rotation, and we really see a lot of leadership coming out of China,
Mm-hmm.
right? I mean, and China out. So there's two securities that really led the way coming out of this pandemic. It was again the technology ETFs
Yeah.
as well as the Chinese ETFs, right? So I don't know how long the leadership in China is going to last, but it appears as though it's going to have some leadership heading into at least first quarter of 2021. And one way to monitor um, the MCHI, which is the Chinese ETF,
Mm.
is using the stochastics, right? In terms of looking for opportunities for when it gets overbought and when it gets oversold. So
Mm.
it's trending higher. You can use stochastics in along with a moving average to help you follow the trend, right? But I think in the over the next 3 months, heading into again the first quarter of 2021, we may see some support in MCHI at around the 75 price level because it was pulling back a bit. It was losing some steam these last couple of days, right? But
Yeah.
the trend is still upward, and we may see MCHI at the 90s 100 price level
Mm.
in the short to medium term.
Got it.
All right. US sectors, the US sector rotation, we see tech losing some steam,
Yeah.
consumer discretionary, again gaining some momentum, and we're really seeing that churn um, within the sectors. I still think tech is going to lead into 2021,
Yeah.
but not as much as it did. It can't.
I agree.
Well, I shouldn't say it can't.
Yeah.
but it's highly unlikely it's going to lead with that much distance relative to the other sectors than
Hmm.
it did in 2020. And we're seeing that happening now where I think people are literally, you actually literally see the rotation
Yes.
out of tech, especially when they had the vaccine announcement on Monday.
Yeah, that was strong. Yep. Yep.
And it again, it goes back to people using algorithms. It goes back
Mm.
to the technology that is being used to make investment decisions. As soon as the announcement is made, everybody adjust their portfolios at the same time, and it's just a huge pullback
Yeah.
in the sector, right?
Uh-huh. And what do you see with
So
lagging sectors that have been lagging for quite some time, like energy? You just stay out of it
the
until it almost
trend is your friend until it ends, right? I mean, and this is not the you're not the first person to ask about energy. I've been telling I've been warning about, again, it goes back to
Mm.
the sector rotation. That energy square
Mhm.
has been at that bottom left corner for the past 3 to 4 years.
Jeez. Wow. Yeah, well, yeah, it makes sense. It makes sense. They've been
It
relatively.
has it has never it I think it once or twice it peaked when, again, I'm off from my memory
Yeah.
of monitoring my models. It moved a bit. Actually, it moved, when it was starting to show some signs of recovery in January of 2020.
Interesting.
January this year, it was showing some signs of recovery, and that it just disappeared
Yeah, it's like a head
into
fake. Right?
into February. Yeah, it was a real head fake.
I'll tell you, I
Yeah.
was pro energy this year, and that's the one thing that burned me, And it started out early this year. We had geopolitical stuff.
Yeah,
Remember that?
yeah, and it was gaining some momentum, and then COVID just
Yes.
took it out, took the wind out of its sails.
Yep.
But I
You
mean, it might be 2021's year, because I saw, I mean, monitoring natural gas had a good run up.
this past
Had
month.
Yeah,
Hmm.
these last couple of months, right? Oil had a bit of bearish bear market move, but it recovered with a nice V, right? So you may see some stability on the energy front, um, going into 2021, and with the vaccine announcement,
Hmm.
people, investors up appears to be, from monitoring the market movements, positioning themselves to this back to normal scenario, post pandemic. These post pandemic moves, and energy will have a role to play in that.
Got it. Yep.
Right. So in terms of the S&P 500, um, it looks like a W, right? It looks like a W to me,
Yeah.
right?
Yep.
Looks like a W to me. So double bottom. Once it breaks above that ceiling,
Mm.
which I think it did, or attempted to earlier this week, I think we can see 3,900 on the S&P,
Mm.
hopefully by year end or early January 2021.
Got it. Yep.
Right? Bitcoin, the cryptos, gold. I didn't want to talk about gold, because I assumed everyone would have, people have been talking about gold already.
Yeah.
So I wanted to, again, I'm a bit of a I've been monitoring the cryptocurrency, um these cryptocurrencies
Hmm.
for the last 3 years, like a lot of other young investment
Yeah.
professionals, as an alternative, you
Yeah.
know, as an alternative investment asset,
Hmm.
as an alternative investment. And yeah, it got some legs coming out of the pandemic, and the other leg up it made was when
Yes.
PayPal announced that they're going to start allowing Bitcoin and other cryptocurrencies into the as a form of payment. So we've been seeing that spike up. It looks similar to what happened in 2017,
Mm.
right? That vertical move that's always so scary,
Mm-hmm.
right? But I think if you use like the MACD as a tool,
Mm-hmm.
it could provide some level of entry and exit
Got it.
when it comes to monitoring this cryptocurrency.
Mm.
But you want to have that 45-degree angle move, right, to be
Yeah.
comfortable with it, but you're still not seeing it. It looks like a roller coaster. It looks like
Yeah.
a roller.
Do you think it's sort of at the overbought stage now? Would you be entering upon the pullbacks?
Uh, you can day trade it.
Yeah.
You can day trade it.
Mm.
You can day trade it.
Okay.
Right? So probably you'd want to do some back testing, not data mining, but back testing on shorter term time frames to see what's the best indicator to use
Got it.
to 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 maximize these volatile swings in this incredible new asset.
Yeah. And I've been seeing your LinkedIn posts. You put one about Litecoin, which has been on the rise
Yeah,
well this year,
yeah,
right?
all of them have been moving.
Yeah.
All of them have been moving sharply higher, and it's
Mhm.
just swinging. So you just come in, you estimate the rally, and
Yeah.
you move up your stops. You get stopped out, it dips,
Yep.
and you just continue to ride the trend.
Mm. Got it.
Trend is your friend until it ends.
Yeah. Yeah.
You know?
Bitcoin is like the anti-energy. It's on the top
Yeah,
quadrant. Yeah.
it's amazing. It's
Yeah.
crazy to see where it would go um,
Yeah.
from here. You know?
I'm definitely taking a watch at it. And I think, a lot of people are thinking if 1600 break can hold, the next is the 20K level. So, and there's
Yeah,
a lot of room there. So we'll see.
yeah.
And what else you have? I think Bitcoin is the last one.
Yeah, Bitcoin was the last one,
Great.
right? So so usually you'd wanna um for develop your process,
Mm-hmm.
and don't be afraid to make mistakes and keep tinkering and keep tweaking and keep improving
Yeah.
your process, and you would be you'll be able to achieve great things because the technology is available to um to profit from these markets, right?
And I was going to ask, is there any, evolving areas of interest within technicals that you've been looking at?
Yeah. So again, it's baby steps. At in the Caribbean for me, I wanna start incorporating do some more research in terms of market breadth.
Yeah.
One thing I was looking at, so we use a lot of ETFs. We use a lot of ETFs here.
Mm-hmm.
So what I was thinking out loud is, how can you determine, market breadth indicators on ETFs,
Mm.
and
Yeah.
how feasible that would be, you know, on a intraday, on a daily, on a weekly time frame. So one of the stuff that's one of the things I want to work on
Yeah.
in 2021.
Mm.
Another thing I've been doing some research. I've been looking at unorthodox, or I don't want to say unpopular, but I've been looking at other technical indicators that aren't um, popular that everyone doesn't use to see if, can I get an edge using this indicator instead of RSI or MACD. So I came across Bill Williams. You know
Okay.
the Williams percentage R?
Yes. Yes.
Right. So that's same Williams. He
Okay.
also has indicators called fractals
Yes.
and an alligator
Mm-hmm.
indicator. So I'm gonna, do some back testing. I'm learning how to code as well. So
Nice.
I won't have to be too dependent on the current on these terminal packages,
Yeah. Yeah.
and I'm going to see how viable these indicators are
Yeah.
uh, going forward to incorporate into my process.
Great. Great. Have you been I've been trying to learn the Pine script, taking new tutorials on that. It's like the trading views light Python code.
Okay.
Yeah, and a lot of that is open source too, which is great. So you can see
Yeah.
what the traders have done. It's amazing.
Yeah, man. Yeah,
That's awesome.
yeah, that's probably one of the packages I'm gonna
Yeah.
start um, using a premium. That and Finviz.
Yes. Exactly.
Yeah,
FinBook is really good. Yeah, I'll keep
yeah.
on the
So
Pine script. Yeah, maybe this winter.
yeah,
And in
I'm
terms of
gonna,
market breadth, you're looking at like, for example, percent of stocks that are above their 50-day within an ETF, right?
yeah. So I would use 10,
Mm-hmm.
50, and 200
Okay,
within the ETFs.
got it,
So
got it.
I would take less MCHI.
Mm-hmm.
I would go back probably since inception of the MCHI, and check to see, okay, is it at 50%? When does it call for a correction? When does it call for the end of a correction?
Nice.
And it would hopefully help with improving on the timing aspect of of uh, of these securities.
Yeah, yeah. That's really smart. I haven't seen that anywhere else.
Because the information is available, it's there. It's just to analyze it, right?
That's true. Yeah, great. Yeah, so your process, a lot of trend cycles, and these momentum or oscillators, right? That helps you with the timing. Yeah.
Uh, yeah, momentum and trend following technical indicators. So it would
Great.
have been so we would take a universe of technical indicators and back test it for each security in the universe
Hmm.
to determine which is the best technical indicator to use. Because it doesn't conceptually make sense to use the same technical indicator that you would use for a short-term fixed income
Hmm.
bond that you would use for the S&P 500, right? You
Yes,
want to see what is the best for which one,
got it.
right? And then over time, the market isn't static. So
Mm.
over time, the best technical indicator will change. So you
Yeah.
might want to take out the DMI and put in the MACD. You want to probably might want to take out the MACD and use a simple moving average,
Yeah.
right? To see what was the best to use. It may not be right all of the time, but I'm sure you could add an extra um, couple of basis points from the process,
Yeah.
from that process, that rotation process as well.
Got it. That's very helpful. All right, Cedric, this is great. It's great getting an understanding of what you're seeing out there in the market, and also learning about your background. Where can folks find you online?
Okay. So uh, you can find me on LinkedIn. Just type in my name, Cedric Thompson. On Twitter at Ceddy CEDDY 86, and on Instagram at Ceddy CEDDY 8600.
Got it.
Right. I'm also one of the things I am a part of is this startup called Fill the Gap,
Yes.
right? So Fill the Gap is a Caribbean-based financial advisory and financial education firm,
Mhm.
right? We really want to help the people within the region, region being the Caribbean region, as well as our diaspora,
Mm.
to learn how to invest and to get a better understanding of understanding finance as well as understanding investments. So
Yes.
we are working towards building a financial education program
Mhm.
and helping people build out their portfolios. So Phil Williams, again, the Phil and Philly Gap,
Okay, that's where it's coming
right? He's the yeah, he's the founder and executive chairman. So I would encourage everyone to follow at Philly Gap TT
Yes.
for for um for our posts and our website, fillthegap.co, right?
Yeah.
And just take a look. We're heading into 2021. We're gonna have a lot of content
Yeah.
coming out in terms of helping people to understand um, their finances, their personal finance, as well as uh, the local
Mm.
and global economies, as well as the local and global uh, financial markets.
Amazing, amazing, much needed, and I think this is a great endeavor. I kept hearing you
Thank
say
you,
when
appreciate
you
that.
started talking about your process and portfolio management, the people of the people of Trinidad. It's benefited the people of Trinidad, and I think that
Yeah,
is a motivating factor. A lot of people forget the financial services part of finance.
yes, it's about. I mean, where I work, I
Mm.
have two jobs. One of them is at this mutual fund company. It's an indigenous firm, and
Ah,
it was really geared to give the person on the street the opportunity to buy stocks and bonds, right? So it's all about generating wealth for the people. So I took that with me, took that philosophy with me, and trying to bring it into this startup, Fill the Gap.
yeah, amazing. I'm definitely going to tune in. I'm looking forward to the content next year. This has been a very spirited discussion. Thank you so much, Cedric. And
Thank you,
good
Dominic.
to have you. All right.